Hello, this is Jordan. This video is being recorded on the afternoon of Monday, March 11th, 2024. Thank you so much for joining me today. In this video, I'm going to talk about some historical breakouts in the capital markets and how they can inform us as to the future direction of gold and silver, and also what the potential implications are beyond the obvious. Now let's get into it. So here I am showing gold at the top, and below that, some other markets that have made historical breakouts at some point. We have Hong Kong here, which in the mid-'80s, it broke out from a 13-year base. And we can see after this breakout how strong the performance is. Sometimes you get a snapback, a hard snapback. This is after the 1987 market crash. But even if you get that kind of a snapback post-breakout, it turns out to be an incredible buying opportunity. So you can see the market kept running. S&P 500, now the Dow is a better one. I'll show you that in the next slide, but 1982 here. We know how that went. 2013 here, so that was a 13-year base. Not the best performance. I mean, it was weaker than this period, but nevertheless, it's still been a secular bull market. Oil, you can't see, but it peaked, I think, around 40, and I want to say 80 or 81. So this was a 24-year base. Finally broken in 2004. Boom, almost a 300% gain from the breakout in 4 years. Copper, some other data sources have it up here in the early to mid 70s. So based on that, you could say this was a 30-year base. Also broke out in 2004. Really exploded quickly after the breakout. Almost tripled from that point. So this is what you tend to get following long consolidations. Now, just zooming in on, I think, all of those, this is the downside of the S&P. So here you can see the 16-year base. Never was able to break 1,030, so it's trading mostly 700, 800, 9 at that area. Then after it breaks out, runs to 2730 in 5 years. Here's copper. We mentioned it in the last slide. Basically consolidated from about 50 cents to $1.45 over really 30 years or maybe a little bit more. Then it runs up all the way to $4. And I think here it got pretty close to 5. Oil, one of the best. So from 11 to 40, again, this is a 24, 25-year breakout. 4 years later, up at 145 after never trading above 40 for a really long time. The Hang Seng, Hong Kong, here are the numbers. So it breaks above 1,800 here in 1986. Almost hits 4,000 before the 87 crash. Then 8 years later or so, all the way up to 12,000. I mean, where these markets go, the levels that they reach after these major breakouts, it's unthinkable to most market observers. But that's what happens. Now, I'd say coming major breakouts, but gold has already broken out. So what are some other markets with respect to precious metals or charts or ratios that we can expect to break out? Now, I should have included this. This is a gold stocks, Barron's Gold Mining Index. This, to me, 1964, late 64, one of the biggest breakouts of all time, broke out from a 28-year base. Now, from this point, over the next 4 years, that's a 400% gain. And so this is a secular bull market here. So you did have two 60% declines, which is really rough. But this is a secular bull here. And it's not a perfect base going back to 1980 because there are marginal new highs here and here. But this, to me, is what we can expect over the coming years. That kind of a move. And so silver has a lot of work to do to get back to 50. I mentioned 26 to 28 is really stiff resistance. But next 3, 5, 7, next decade, I mean, you can see where this is going. This is gold against the CPI, so an inflation-adjusted gold chart. So this is 2,400 will break a lot of resistance here. I don't know where the peak is. It's above 2,500. But this is something we could look forward to maybe in the next year or two, maybe this year. Gold making a new inflation-adjusted all-time high. That'll be the first time since 1980. So that's like almost a 45-year breakout. Now, with respect to the biggest breakout of all time, I think it's the gold stocks in 1964 and 1965, if we're just looking at stocks, bonds, and commodities. But the correct answer is actually commodities and commodity prices in the early 70s. Now, it's a little bit artificial, of course, because we went off the gold standard and went to paper money, so everything exploded. But nevertheless, even though it was kind of artificial, from 1781, I mean, that's like almost a 200-year base here. That, to me, I mean, biggest breakout of all time, yes, commodity prices in the early 70s. And I show this, again, this is a bit artificial because we went to paper money, but this is an extreme example of what happens when you break out from a long base. Now, I love these historical charts. In yellow here, this is copper. I don't know about the data. I'm colorblind. I don't know what the real price is, the inflation adjust. I don't know if this is silver or gray or whatever. But anyway, yellow's nominal copper. And so think about even before 1960 to 80, even here in the 40s and 50s, you had this base for a super long time. And this price is $1 per ton. The price was in the low hundreds here for so long. And then a decade or two later, suddenly you're at, what, $3,000 a ton? Whereas here, you were probably like at $300 a ton here. So again, it shows you the kind of moves that can be made from these super long bases. And this just gives you a better look at the copper base, that 30-year base. You can see here from 50 cents to $1.50, and then boom, all the way up to $4. Happened super quick. And another example, oil was a couple bucks here in the 70s. And we went to paper money, and of course, then you had the embargo and all those problems. And so that took oil all the way up to $40. So this is an extreme example, but it just shows you what can happen when you move from a long base. And here's $40 right here. So what does that mean for gold and silver here and now? So this is the weekly line chart of gold. I mean, it's breaking out again. I've said this in other videos. This is a beautiful cup and handle. So this is the future for gold over the next decade, 5 to 10 years. This is the future. I mean, it's set up to go much higher. Now, as that happens, there will be a lot of volatility. We saw that in the 70s. This was minus 30% here. I think this was like minus 23% here. So it's not going to be a smooth ride. And if this is like the 70s, it's going to be really explosive, and then you'll get severe pullbacks. So we have to keep that in mind. But history tells us, not only history, but this 13-year pattern, it's going a lot higher. This isn't just going to 3,000 or 4,000. This is going a lot higher. Same thing with silver. I mean, look at what happened here with silver. I mean, this wasn't the all-time high because it was actually in the 1860s during the Civil War before we demonetized silver. But this is like a 45-year base. This was a breakout here. You get the harsh retest. This is like in the low ones. It went all the way up to basically 50 in 8 years. So this is the monthly closing line. So there's monthly closing resistance, I think at 34 or 35 here. So if we see a monthly or quarterly close in the mid-30s, that's telling us silver is going to be able to move up to 50 and then break. So this is a super bullish setup for silver. When this moves above 50, like David Morgan said in our interview, it's going to hit 100 pretty quickly. And then at that point, you'll probably get a big correction, a big snapback. But yeah, just like you saw with gold, this is the future over the next decade. It's set up to go much, much higher. So that's all for this video. Thank you for making it all the way till the end. It's quite simple. Precious metals have this set up for explosive moves over the next decade. The technical setup is there. If you look at what's happening in the economy, you're starting to see it. We're going to get to that point where we have to print a lot of money. We have to stimulate, even when inflation is a problem, even when inflation is at 3% or whatever they say. So that's just the reality. It's not going to be good for society. A lot of problems are going to come with higher inflation. I mean, we're already starting to see that, higher crime and homelessness and all those things. Unfortunately, it's going to get a lot worse, but make sure you are on the right side of these market moves that are coming up over the next decade. It's going to be really explosive. And thank you so much for tuning in. Leave a comment. Let me know what you think. I'll talk to you guys again in the next video.